All right, so it's in. Q2 is delivered, and so has Tesla in their quarterly deliveries. We're going to dive into their numbers and maybe take a look at where Tesla as a company is heading, and also maybe is their stock going to move. My name is Paul Barron. Welcome back to Tech Path. Let's jump into it today. A quick story from Inside EVs, which was really kind of I still refer to them as one of the key sources, at least we follow, and we love their work. And thanks, guys, over on Inside EVs. Sometimes you use some of our videos. Feel free to use this one as well. Tesla is delivering record-setting numbers here. Jumping to the article, 201,250 cars globally in the Q2 number. And of course, when you look at the Q2 numbers for Tesla, I just kind of want to run down through a couple of these things here. So just released their Q2 production delivery report. There was some interesting things that moved around. I'll give you a little bit of insights of what we saw in some of the Tesla Owners Club, but basically 201,250 global deliveries. Here's what's interesting to me is the Model 3 and the Model Model 3 and the Model Y were the primary delivery elements in the entire quarter. So for that to be still pretty much a two-car race for Tesla is very impressive. Obviously, with Model S and Model X coming in Q3 and Q4, we could see a little bit different kind of landscape, and also some, a handful of more deliveries slated. So the question I think is going to be, which a lot of people have been looking to, is can Tesla hit the million automobile mark for this year, 2021? If they do that, if they are able to pull that off, I mean, that to me would be an absolute barn burner for Elon in terms of total deliveries. I have a feeling he is really pushing hard to get to that point. I saw some tweets that were kind of interesting. There was a couple of things in there. Of course, here's Elon's tweet, but there was a couple of things in here that they were talking about where they had actually shifted some of the VIN numbers from East Coast deliveries to West Coast deliveries so they could speed up the cycle and be able to hit those Q2 numbers. Hey, listen, I don't blame Tesla for that, but I know probably some of the East Coast people were hopefully going to get their car, thought they might get their car in June, and ended up not. So they're rolling over to July. So that's kind of the scenario here. I think that's one of the things that you have to look at Tesla. They do have some very strategic ways, and because of their sales model, they can pull these things off. It's a little different when you have the old ICE model and dealership network that's out there, and everything takes such a long time in a very lethargic model in terms of their distribution. So kudos to Tesla, because I think the fact that they can move on a dime is actually pretty impressive. Back to their graphic they're showing some of their picture on their deliveries here. Tesla lists the Model 3Y deliveries at 199,360, while the combined S and X were only 1,890. Obviously, we know this was the period of time that the S and X was going through the refresh, which is fine. I understand. Sure, it did take a little bit longer, but the fact that we've got S and X out now and are at least in movement for deliveries, that I think is a big thing. And it's a good next step for Tesla, because they have kind of struggled with kind of where they are going around as a company. And when you look at what Elon's been, promising around FSD and delivery in terms of actually getting what I think will be the killer app is going to be the subscription service for FSD. All of those kind of things will play into us. I want to jump to a story that was done by our EV Annex friends over here. Matter of fact, they were right here in Florida, but will this Tesla stock surge this decade? And in the next 10 years, basically, is what they're going into. Here's kind of their breakdown, and they did have some good points here that I wanted to highlight. And deliveries are a factor here, and there are some things within this article that we're going to kind of juxtapose to kind of show there are some alternatives here that could be facing Tesla in the next few years in terms of challenges. And not only that, in reference to the growth of the amount of vehicles that are moving into space in terms of EVs. So back to the article here. Tesla stock rocket fuel has stalled of late. Here you got it. Basically, everybody knows, kind of down from its high, now down in the 600 range. We did see the all-time high of 880, which was in January. Obviously, the main reasons I think at that time were still remnants of Battery Day and some of those things. And also the big thing is that we did not see much movement from the legacy car makers early in the year. So Tesla did not get any wind taken out of its sails, and it really kind of pushed them on. For the first time, though, Tesla is now facing some pretty heavy competition. And when you look at that, I think that has more of an impact on Tesla than Tesla themselves, is that we actually are seeing movement in the space for the first time. And when I say real movement, sure, GM has been doing this with the Bolt. We've seen some of the other vehicles like Audi and the e-tron series and all those kinds of aspects in the EV space that have been kind of tinkering, but there hasn't been any real major movement. And when I say major movement, meaning brands that are going all in on EVs. This was the year that pretty much set the roadmap in place. And I think that's going to be one of the things that really starts to challenge Tesla, maybe for the first time ever. Well, it will be for the first time ever in the sense of seeing where it's going to go. The other thing that they point to is Tesla's relentless pursuit of efficiency gains, because in 2017, they introduced the 2170 battery cell boosting capacity up 50%. That's a big deal. In 2019, they brought the Shanghai Gigafactory on, which was slashing its shipping cost and delivering great savings to them in 2020. And then you see some other aspects right here. In 2017, Tesla's average cost per vehicle dropped 55%, $84,000 to $38,000. Now, this is a little bit misleading right here. And I want to call them out on this because really at that period of time in 2017, there were only two cars. I mean, even the Model 3 had not been delivered yet in 2017. So of course you're going to have high volume. Model 3 comes into the game, starts taking over sales, and of course you're going to see your average numbers go down, and that's what dropped it down to the $38,000 number. Tesla did achieve an industry-leading operating margin of 6.3% in 2020. So that's kind of where the naysayers have got a little bit of egg on their face. And, Gordon Johnson, I know you're listening. I know you're watching this show right now. He's still one of the worst Tesla analysts in the history of Tesla analysts. This guy has gotten it wrong so many times. I still don't believe and understand why people are still quoting him and where he's going with this. But anyway, the point is that their battery innovations have been a big factor. They've been able to reduce cost, and Elon and his first principles model is one that I think is starting to invade the development cycles in some of these other manufacturers. And because of that, I think it's going to be a scenario that it's a little bit of an arms race right now between all of what Tesla is doing and then also the rest of the industry. But another quick point here is switching to autonomous vehicles. This is where it gets interesting. Switching to autonomous vehicles will be a much bigger deal. And I think everybody is on that. We've talked about it here in terms of the robotaxi fleet and what that could mean to Tesla. And what I mean by that, if you haven't checked out my robotaxi analysis on food delivery, go back and check on that and you can see just how wrong I was. And what I mean by that is that I really thought that Tesla would move much faster in the robotaxi scenario than they have. And all that, of course, depends on FSD and full autonomy and all those kind of things. I have a completely different viewpoint of that now, and I'm still a Tesla bull. And I know you guys in the comments, you're going to tell me, well, you're not a Tesla bull if you don't believe that full autonomy is going to happen this year. It's probably, well, it won't happen this year. Full autonomy is not going to happen this year. And it does impact what's happening around the world in terms of innovation. We've had some drone companies on the show here, and we've gone into the drone delivery analysis and what that's going to do in terms of line of sight. That's probably going to remove food delivery, or at least a bulk of food delivery, out of the cycle for Tesla, because they're probably still 2 to 3 years away from a fully autonomous fleet and robotaxi. And then you move into the competition. And a lot of people think it's Uber, and it is not. It is not Uber for Tesla on a global scale. And I want to talk to this. We just did a piece on the Didi IPO here recently. You should check that video out because we had Taylor Ogan on talking about that. He's basically a Chinese analyst in terms of analyzing Chinese companies and where their growth and technology is moving. And he had a lot to say about that. But I want to look at this. The potential income for the companies that enable this transition is incalculable. and Tesla is in the position to lead the revolution. Research from ARC indicates ride-hailing platforms could generate around 1.2 trillion, which would be profits for 2030. I think obviously we have to get to fully autonomous EVs to get there, which would mean autonomous EVs could earn a tidy $250 billion a year. Now, Tesla has over 1 million vehicles on the road, and their cameras are capturing video, basically as you read this, is what they're saying. Over 3 billion miles worth of, this was as of February 2020. So when you look at this in comparison to what some of the current leads in the US are doing, Tesla is by far ahead of everyone when it comes to that. But when you look on the global scale of things, and I want to jump to this fact box article right here on Didi. Factbox. How do ride-hailing giants Didi and Uber compare? They're not even looking at, autonomous yet. But remember, Didi, maybe don't know this about Didi. Didi is actually a company that is a little bit more than ride-hailing. I think they have surpassed Uber by leaps and bounds, but primarily because of Didi Labs, which is their autonomous and data center that's acquiring information. And what they're doing in terms of the Didi cars, because they actually have a vehicle that they were manufacturing in cooperation with BYD, is look at these numbers right here. This is where it gets really interesting. Didi absorbed Uber's China-based business in 2016. Uber retains a 12% stake and averaged 25 million rides a day, right? Now look here. As you get further into this article, this is the number that if I was a Tesla stock owner, and I am, this worries me a little bit. Didi has 15 million annual active drivers globally. This was as of March 2021. 15 million. Tesla has 1 million cars on the road collecting information. If Didi is collecting information through these 15 million drivers around the globe, now remember, Didi is in, I think they were in 10 countries. We won't see them anytime soon in the United States, but the potential global market is what Tesla is after. This ride-hailing market here in the US is going to have a heavy competition with Uber, but when you get into Europe, the Middle East, Asia, and all of the growth markets that are emerging, these new ride-hailing opportunities are going to be huge. So that concerns me a bit with where Tesla is going and whether or not they can catch a company like Didi even, if Didi is in fact moving a lot of this data into Didi Labs. That will be the question, and I think the one that I'm very interested in understanding. Lastly, I want to jump to the Q2 EV sentiment here. And this, we've got a whole array that we've set up on basically our Speech IQ scenario where we analyze sentiment across both stocks, EV sentiment, and then across brands. And if you look at where Tesla, Ford, GM, XPeng, NIO, BYD, VW, Mercedes, and BMW hold out. And this is this current quarter, quarter two of this year, 2021, April, May, June. I want you to look at the numbers here. This is where it gets really interesting. I don't have my cursor highlighted too much, but Tesla owns April at a 78.9, and the near and closest one to them was BYD at 73.5 out of 100. This is sentiment. And we're pulling these off of the social platforms. So this is pulling everywhere from the Chinese social platforms that you can get access to for Scrape, and then all the media and social platforms that basically go around this. So it's more than just Twitter, Facebook, Instagram, TikTok, etc. But you can kind of see Ford right here. And I want you to follow this orange bar. Ford right here, 52.3 in April. Remember, this is pre-Lightning, and really when everybody was kind of struggling with Mach-E sales. And this is related to EV sentiment, not ICE vehicle sentiment, so EV sentiment. Ford came in at 52. They dropped a little bit right here, and then, that's Mercedes. They climbed a little bit right here to 60.2. Then they moved up to 68.9, so a big jump from May to June right here for Ford. This is when the Lightning was released right there. That is very interesting to me because if you look at Tesla, they're holding 78.9, they dropped a little bit right here in May, and then they reclimbed a little bit in June. And I think 80 to 85 is probably kind of the ultimate holy grail based on the data that we've been able to pull so far. So Ford is definitely on the move in terms of sentiment. There's some other ones in here that I think are interesting to follow, and that is BYD. Let's take a look back at that chart. 73.5, this again, BYD is one of those sleeper brands that no one knows about, but the Chinese know about it. So 73, holding at 74, and then dropped a little bit right here at 73.4. So they're also has a lot of similarities to Tesla in terms of brand affinity. The ones that I'm really interested in are these growth brands. So let me jump to GM real quick. 49.8 right here. Nice move to 55.8, and then a nice little dip right here at 53.6. So GM is actually, this was impressive to me because they haven't really released a ton of cars yet. Mercedes, I still think is too early for them in terms of EV. They just haven't, there's none on the road and people don't know, but there's a lot of pent up demand around it just to be able for them to register on sentiment. So that's a big thing. And then also I think with NIO, which has been able to hold on as well, even though a little bit unstable, they've jumped a little bit in the last month of the quarter, which was 72.9 with NIO. And I like that. XPeng, another high performer. So all of these Chinese brands seem to be pumping. But here's the cool thing. All of the US brands that have started to really move into this space, including Ford, GM, I like this. I think this is a good move. And I think Ford may be in the pole position to really see a big climb, especially when they start rolling out the Ford Lightning. Because I continue to see more and more videos. You got to check out the one with Lou over on Unbox Therapy. Him and Peter McKinnis did a piece on the Ford Lightning, and they actually had one in there. It was a Platinum Series. Unbelievable review of that vehicle. And I've seen a lot of it. We've had, of course, Ricky from 2-Bit Da Vinci on talking about the Ford Lightning, and you should check out our video on that. Don't forget that. So if you're looking at the Ford Lightning, at least kind of just around there. Back to Tesla. The whole point is that Tesla had and has held the pole position for the last pretty much 5 years, 10 years, especially now that EV has moved into mainstream. But these companies are coming fast, and I think this is going to be one of those scenarios that Tesla needs to really, really step up the game. Cybertruck is going to do a lot for this, and so is the Compact. Both of these things need to happen for Tesla, and maybe, it's always that player that kind of comes in with the last hurrah that comes in and says, wait a minute, don't forget about this. Oh, and one more thing, kind of thing like Steve Jobs would do. So I think maybe Elon is on a kind of a cat and mouse game with the US manufacturers and also the Chinese manufacturers. We'll see. Cybertruck's on its way. Compact is coming. We checked out the Dolphin the other day, which is basically BYD's compact killer, a $10,000 vehicle that does amazing things. That's going to be an interesting vehicle because it's a different classification in terms of price point. So as you can see, I think the point that I'm getting across here is Tesla has a complete fleet full of competition now. So 200,000, listen, 200,000 deliveries, absolutely amazing for Q2. And Elon, kudos to what he's done. He has delivered again. And I think that's the key with all of these guys because everybody else is still chasing him. Listen, they haven't proven their track record just yet. Elon's starting to prove his track record, and he's doing it quarter after quarter in a very competitive space. So if you guys are listening in over on the podcast, make sure and give us some stars. And we love to get your feedback over there as well. Here on YouTube, man, the number one place, here on YouTube, the number one thing you can do for this show is subscribe. We're one of the fastest growing tech, EV, and crypto channels on the interwebs. Please just share this with someone. Say, hey, we'll learn a little bit about tech. Check out Paul over on TechPath and the Paul Barron Network. Hopefully you guys have a great 4th if we get this out to you before then. And number one, if you have an idea for a show or you want us to cover something a little bit more deep dive, just send us a note to producer@revernetworks.com or hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.
Want to do it one more time, Paul?
because of
Yeah,
this,
there's a little wipe thing.
because of the wipe. Got it?
Because of the wipe, I don't know.
And you said if we get it out to you by
Yeah. Okay. I will leave that alone. Yeah. And here we go. We're going out. All right. So you're watching maybe over on, no. All right. So maybe you're listening in over on the podcast right now. Make sure and give us some stars. Give us a little bit of feedback. It's how we kind of get, an understanding of what you want to hear on the show from the podcast side. And if you're in your Tesla right now, cruising around, you can actually, get it up on Spotify, put it on your favorites, follow it, and it'll be right there on your dash every day. Tech Path. And we're dropping videos and audio every day, so that's cool. If you have an idea for the show, of course, you can always send that to producer@reverendnetworks.com. Of course, you can always hit me up on Twitter @PaulBaron. And if you're here on YouTube, number one thing you can do for the show is subscribe and share this with a friend. Let somebody know if they're learning about tech, crypto, EV, innovation, robotics, AI, autonomy, where the world is going. It's the Tech Path. That's what we're talking about here. We'll catch you next time right here on Tech Path.